Good morning or good evening for some of you. Thank you for attending. I'm with Andrew Ware, QP, our principal consulting geologist, and Richard, of course, our CEO. We wanted to hold a webinar today to discuss the results of the PEA that was published last week. But we're obviously very pleased with those results. I think they've established Santo Tomás, as Richard has quoted in the news release, as saying one of the most cost-effective, significant, large potential copper producers on the planet right now. Certainly those results place Santo Tomás among a relatively small handful of projects capable of producing over a certain threshold, in this case over 100,000 tons per year. And it places us as one of the most capital efficient of that group, one of the lowest absolute CapEx projects in that group, and one of the most profitable. So not the biggest project on the planet, but at today's copper prices, Santo Tomás is capable of producing revenues of over $1 billion a year, and to do so for 22.6 years with pretty high gross margins today of over 50%. So a very, very significant project. And we're pleased with these results, pleased with the team that put them together, and excited about the next phase at Santo Tomás, which we will be talking a little bit about. So there will be some forward-looking statements in this presentation. And we want to focus on a few things here. One is a discussion of the results and putting them in the context of their peer group. The other is the way forward for us. What are the next steps for us? Another subject here is we want to talk about the current market, not just necessarily for copper. I think the copper story is well understood. The supply-demand dynamic is well understood. But we'd like to discuss where majors are in terms of development of projects that transition from brownfield expansions to what's important to us, which would be acquisition of greenfield projects and putting them in production. We'd like to discuss a little bit of that. And then, of course, very importantly for us, for our shareholders, is the current situation in Mexico. So we'll deal a little bit with our understanding of that legislative process, what it might mean for us, and go from there. The results, most of you on this call, I think, are familiar with these. For the benefit of those that aren't, we will be discussing the results of last week's PEA. Obviously, we've improved the capital figure. We've knocked a few $100 million off the CapEx of this project. We've increased the net present value up to almost $1.5 billion at today's copper price. I think we're approaching $2 billion on that NPV. The IRR of 22.2% at $4 copper is important because it crosses some important hurdle rates of return for potential developers of this project. So big project, greater than 22 billion life of mine revenues, high gross margins, low costs, particularly in the first 5 years, $1.34 per pound on an equivalent basis versus copper's price today. I'm not sure, I haven't looked, but it's somewhere in the range of 430, I think, or high 420s. We continue to have strong local support for this project. Richard and Ian Graham had met recently with senior state officials all the way up to the Minister of the Economy and got pledges of support from them. I'll talk a little bit more about the importance of this project in the region and the type of support that we enjoy. The mineral resource, the PEA, establishes an NPV that means that we're trading at less than 5% of our NAV on a per share basis. M&A transactions, as we'll talk about a little later, are taking place. They're providing some useful metrics, and they certainly show some significant and, I think, asymmetrical upside for the potential value of Oroco. As we enter into a period where we think that there's a possibility, hopefully even a probability, that we will get acquisitive interest for this project, it's important to understand where those transactions are taking place in a valuation sense and what that means for Oroco. So I'm going to ask Richard to talk a little bit about these results, how we came about these, and then Andrew will talk a little later about moving forward next steps in advancement of Santo Tomás. So Richard, over to you.
Thanks, Adam. So when we finished the first look at this project with the PEA last year, it was obvious to me that we could do a much better job in improving the economics of what we had. Had an expansion going on after just in year 2 of the operation, which we needed to push that expansion back. So we relooked at the mine plan, and we were simple. We needed to bring copper forward in the production plan and push costs backwards in the plan. That's what we did. So we looked at using small equipment to get into that high-grade area in the North Zone. And so now we've got 7 years at 0.51% copper, which is a big improvement. So it enables us to push the expansion out to year 7, 8 instead of year 2. So that pushes $600 million plus of capital back in the mine plan. And we still maintain that high production with 0.5% copper. So that was what was needed, and that's what we did. And that's been fundamental to really showing what this project has, and getting that higher grade material in the first years is the criticality there. And it moves us up. We also managed to reduce the capital. Because we have a smaller mining fleet, we're moving less material. That pushes the initial capital out as well. Most of the $200 million in initial capital reduction is pushing mining fleet back. And we actually start the mining with small 70-ton trucks and really jump into that high grade early on with a minimal amount of material movement. Smaller trucks mean we could have smaller haul roads and really pick the eye out of the deposit right away. Other things that does, it improves that capital efficiency, NPV over initial capital, 1.34, and that's just about the best that you'll get for any significant scale project that's out there at the moment. Maybe next slide there. So this highlights where we sit in the world with a number of other copper projects out there, showing the capital intensity being on the right-hand side of this chart is good. And the only projects that beat us on capital intensity, oxide leaching projects, they don't have to build a mill, so they have an advantage there. But this shows we're one of the most attractive projects from a resource fundamental development point of view. And what really drives our capital and operating cost savings is our location. 100 miles from the ocean. We've got natural gas coming from Texas, which is the cheapest natural gas in the world to provide our electricity. We're not at elevation. We have a local town 15 kilometers away to provide the workforce. So we've got so many things geographically and logistically in our favor, and all of those drive these costs down that puts us in this position on the chart. So this is NPV over initial capital, another way of looking at it, and that's that 1.34 or 1.36 number I talked about. Again, shows us how we managed to move this project and be more capital efficient, and sitting as one of the best projects out there, no question. And still a substantial size, just under 100,000 tons of copper and concentrate a year for the first 8 years, and then the expansion to maintain that as our grade drops. Its exercise was well worth it. I knew that we had it in there, but our first attempt at the PEA didn't quite get there, and this one is much preferred. So this is an interesting chart. This is every project out there. You obviously got to be a bit cautious. Some studies were done much earlier. It's really not definitive, but it shows you the important thing is there is over the 20% after-tax rate of return, which I think is a hurdle rate that you really want to have your projects above that hurdle rate. And obviously we sit there, and the size of the ball here is the circle is the size of the project. So again, a substantial size project, not the biggest, but definitely not the smallest, over 20% and very capital efficient. I think this makes this a very attractive project.
So here's a table from the PEA, the point that I think I want to make by putting this in the presentation is the leverage that Santo Tomás provides to rising copper prices. I think we're conscious that events could happen that could send copper prices lower, but really the view is that copper prices over the next decade will rise and rise significantly. While we do include two lower copper prices, $3 and $3.50 per pound, I think it's the higher copper prices, obviously, we want to focus on here. For every % of increase in copper price, Santo Tomás provides 3.7% rise in NPV, to the point where when copper prices rise to 450, 12.5% above the base case, we see net present value go above 2 billion, and post-tax IRR go to about 28%, which is a really terrific number. An acquisitor, a developer of this project would, of course, not be putting in 100% straight capital in all probability. They'd probably leverage this up to a degree with relatively low-cost debt. So you can engineer a rate of return in excess of that base case, that 100% capital case, and terrifically exceed the base case, or the hurdle rate rather, for a major. So great leverage to copper prices. We've had discussions with a number of majors. One was quite forthcoming about where they see, a number of them have been forthcoming about where they see copper prices going in the future. 450 was a number that one particular major named, saying that in all likelihood, Santo Tomás would be, when Santo Tomás is a big mine, the copper price would be 450 or above. Another major, I think, used the expression, copper prices are going to go bananas. So clearly the majors have their eye on this type of leverage that these projects produce. They want to see downside protection, and I think at 22.2% at $4 copper, we certainly provide that. That is well above the average IRR of projects put in production in the last decade. I think we've got downside protection here in terms of how profitable this project is at a base case, as well as a quite significant gearing to higher copper prices. So Andrew, if you could talk about the program that we've completed, the way forward, the opportunities that remain at Santo Tomás, and what we look to do in what we've been doing for the last year on the ground, and what we're looking to do in a phase 2 at Santo Tomás.
Yeah, certainly. So we're looking at a west-facing section there, north zone to the right, south zone to the left. And that's just the drill pattern with copper percent intercepts on it. As you can see, the north zone's pretty well drilled out in terms of getting us to a indicated resource. All of the south zone is still an inferred resource. We worked up some numbers on what it would take in terms of drilling meters to get the south zone up to indicated, probably looking about $6 million there or something like that. So the interesting part of all of this is you can see the north zone is separated from the south zone. That's driving some of the pit geometry that we're looking at in our PEA. We have a pillar there right under that 5-kilometer number. Ideally, we'd do some infill drilling right where that arrow is and bring some grade back into the model and help us knock down that pillar. As it stands, to get to the coarse crusher, we have to go up over that pillar, back down into the north zone pit to get to the coarse crusher to send that material to the mill. So dropping that would help us significantly in terms of mining costs. You can see the south zone is floored pretty well. So we've drilled some holes there that pass through the mineralization into the footwall. We obviously don't need to drill any additional holes deeper than the red intercepts there, red and yellow intercepts. So that's going to keep our drilling costs down on the south zone. But in the meantime, since we've finished the PEA and all the work that went into the drilling program, we've had our geotechnical and geological teams down in Choice in Lower doing some regional work. Certainly found some points of interest, some nice gold-bearing hematite scars that sit to the north. But also we've done some stream sediment sampling, basically to the east, focused on the eastern side of the deposit in an effort to try and determine if there's anything outstanding that we need to look at, basically where our tailings facility is sited right now. So, there's the Santa Anita zinc mine that way, owned by Peñoles, and that's certainly of interest geologically. In terms of community engagement and ESG initiatives, we continue to work with the community down here. The upkeep on the road to Santo Tomás is an ongoing adventure, I'd say, but we're working with an indigenous community there, and they do a really good job on keeping that thing passable, fixing all of the washouts that happen during the rainy season. And we're keeping them gainfully employed. They enjoy it, and we appreciate the help that they provide to the project. Environmental baseline studies, we've been working with the company on designing the first pass of that. We're looking at installing a weather station or 2 at the project site, as will be required. But we're also looking at initiating a water quality sampling program upstream and downstream from the deposit, which will all be required data for moving forward into a permitting phase. Ideally, we'd like to expand the resource. Probably the biggest opportunity down there is the south zone, right to the very end. You can see an angled hole there. That's hole 18, south zone, hole 18. And basically the southwest quadrant of the south zone is essentially open with some really good looking outcropping mineralization down in the valley behind that section into the screen. That's never been drill tested, and we need to fill that in. There's going to be probably some additional resource there. It's not going to double anything, but 50, 100 million tons of additional resource at much higher grade with essentially no strip would be useful material.
I think it behooves me to mention as well that the mine plan that we chose to go with in this does not impinge on the river. We stay above the Conagua, the Mexican Water Authority, limits in terms of how close you can get to a water body. But you've all heard us talk about the potential of a river diversion. It happens at big projects like this. Both Richard and Ian Graham have been involved in projects that had water proximal to mines. Those mines have been built and they're very successful. A number of our peers, big copper projects, have river diversions or water feature diversions involved in them. We have 200 million tons of mineralized material that is not included in this mine plan because we chose not to include a river diversion. But among the ways to expand Santo Tomás would be a fairly simple river diversion at some point in the future. And I have no doubt that whoever develops this mine will consider that and likely execute it. As well, you know that we drilled at Brazilians and found continuity of mineralization. You can certainly see on the right-hand side of the slide, some of our best drill holes have ended just on the south bank of the river. And there's several hundred meters between, or over a kilometer rather, from there to the holes at Brazilians that encountered the mineralized zone. There is certainly potential to expand with what we've already drilled in the north zone. We have identified in the south zone through drilling mineralization that's outside of the current pit. And then ultimately, whoever operates Santo Tomás would be looking at the Barachi deposit north of us, 550 million tons of approximately 0.45% copper equivalent. And so we chose a mine plan that was buildable, low capex, high return, et cetera, that would be producing, I think it's 107, 108,000 tons of copper equivalent per year for life of mine. That's not the limits of Santo Tomás. Whoever develops this has the option to increase that throughput per year or increase the life of mine. Plenty of additional potential. Phase one was never meant to be exhaustive of the potential of Santo Tomás, and indeed, there's still significant blue sky here. And just a note about questions, there is a question and answer facility here, so if you do have any questions, we'll try and deal with those at the end, but please do enter those into the browser. And I wanted to talk about the current copper market. I don't want to go too much into long-term copper supply and demand. You all know that story quite well. Copper use is growing, electrification is growing. The forecasts are proving to be accurate in terms of increased copper use. We all know that the future of copper is quite bright. So I won't deal with that, but this was a very interesting webinar that happened last week with some very interesting panelists. Robert Friedland, Kathleen Quirk, who recently became CEO and president of Freeport-McMoRan from Bank of Montreal, BMO Capital rather. In that discussion, it's an hour-long talk. I tried to summarize the important parts of it on our Twitter account the other day. Robert Friedland started off by acknowledging what we all know, which is we're going to use a lot more copper. There's no doubt about it. And it's getting harder to find. That was echoed by Colin Hamilton, who said copper is a simple story. Copper and electricity go hand in hand, and we are electrifying our world. He added what started as a China story. China over the last 15 years have been or 20 years have been a very copper intensive phase of economic development. Colin said that demand story has now become a global one and not just a China focused story. Kathleen Quirk, for her part, added that, and from her perch as the president and CEO of Freeport, she's as well positioned as anyone in the world to understand copper supply and demand. She said that we're in the very early stages of demand growth for copper. So even though we've added several million tons per year to consumption over the last decade, it is still viewed as just early stages for the growth of copper demand. It's going to take a lot more than brownfield projects. Freeport-McMoRan has the advantage of a number of legacy assets that they can expand to increase their copper production. But Kathleen acknowledged that it's going to take more than brownfield expansion to meet future demand. They're going to need to build new mines. She added that there's the capital and there's the desire to do that. And the limiting factor is a shortage of actionable projects. And that's a theme that we've been talking about for a number of years. The rate of copper discoveries has fallen off a cliff. The number of prospective development projects out there is very small. It's a fact that is acknowledged every time we meet with a major or a bank and talk about Santo Tomás. They usually start the conversation by acknowledging the shortage of assets similar to Santo Tomás, which is a great way to start a conversation, particularly as we're looking at them to either invest in, maybe ultimately acquire Santo Tomás. It's nice to have the other side of the table acknowledge the scarcity of these assets. Colin Hamilton talked about the increase of M&A that we've been seeing in the last couple of years, boosted by the pressure to grow copper supply. He said, helping to boost the M&A cycle, you're seeing higher through cycle copper prices being used, and that justifies the transactions and leads to higher pricing than one might have seen. Indeed, if you look at a number of the transactions that have taken place recently, the BHP Filo transaction, over $3 billion acquisition of a pre-resource project. Any way you look at that project, whether it's cents per pound in the ground or a percentage of NPV, it is, even though it's pre-resource, pre-PEA, it's difficult to imagine 3.2 billion is anything other than a very high number, perhaps even one of the highest numbers paid on a percentage of NPV basis for copper in the ground. Colin acknowledged there's so few potential development projects out there that can be bought in an appropriate time scale. Again, acknowledging the shortage of assets as we've understood it. And over the time that we've been talking about that theme, there have indeed been very few discoveries. S&P published something last month that talked about the number of discoveries in the last 5, 10, 30 years, and the fact that 4.3%, I think the number is, of discoveries over that time frame have been discoveries in the recent past. The vast majority of these big at surface, easy to find assets, and indeed even some deep assets, has been decades ago. A very compelling situation for those of us who own big at surface copper assets. Colin talked about, Robert Friedland talked about as well, the assumed pricing per pound of copper in some of these transactions. Noted that BHP certainly didn't pay what they paid for Oz Minerals using anything less than a $4.50 per pound copper price. And Colin, in fact, named that 450 as well as his number. And then last word, of course, to Robert Friedland. He said the future is going to be so interesting for those of us with big copper assets. Indeed, I think he's right. So we're at a very good time when the shortage of assets is being acknowledged. The price being used to assess these by majors and potential acquirers and investors is higher, I think, than it's ever been. And I think our PEA coming out the same week as this panel discussion really put it in perspective for us that this is a good time. It's a great time to be coming forward with such an asset. I encourage you all to find this Kitco discussion. Very interesting, a lot of good information, a lot of very encouraging information for copper investors. And of course, Robert Friedland, Kathleen, and Colin do terrific jobs of presenting their perspective of the world. Here's a graphic from that presentation. You can see the prices being paid here for these transactions. Notable in this is the higher numbers appear to be transactions that have taken place more recently. To Colin and Robert Friedland's point, there appears to be an increase in the copper price used to calculate valuations for these transactions. And then I want to put this one up. It speaks, I think, very specifically to some of our numbers. The yellow projects up here are projects that have exceeded or that do exceed the hurdle rate of return for majors. Colin spoke about so many projects in the last decade not meeting that hurdle rate of return. If we put on this table where Santo Tomás would be, obviously our capital intensity per ton was around $10,000. Our internal rate of return at that 10,000 is 22.2. So we would literally be above and off of this chart. A very good sign that Santo Tomás doesn't just crack the threshold of hurdle rate of return, but it's well into what would be attractive to the majors. So this slide, I guess the elephant in the room right now for Oroco and a lot of its peers in Mexico is the current legislative agenda of AMLO, the departing president. AMLO had earlier in the year forwarded a list of constitutional amendments, given the Morena Party's success in the last election and the fact that they have now a supermajority in one of the two legislative bodies, the ability to pass those reforms, constitutional reforms, would appear to be, they're close to it. They don't have it. They don't have a majority in both houses, but they're close. AMLO has revived that wish list of constitutional amendments, one of which is and I'll put in air quotes here, a ban on open pit mining. The reason for the quotes is that an outright ban is not what appears to have been talked about. Every time the subject comes up, they mention new open pit mining concessions. And I think that acknowledges what a mining concession is in Mexico. It's a contract between the government and the concession holder. Contracts cannot be altered unilaterally. Those pushing this potential legislation forward seem to understand that, and that's why the word new comes into the frame. They can't alter old ones, existing ones, but they can change the rules for new ones. Morgan Stanley on the 19th of August published this. They talked about the proposal passing through a committee. It's important to note that is not the Congress. It's not a vote in Congress. It is a committee that leads to another committee that ultimately would take it to Congress. So that wasn't a vote. It was simply a low-level committee passing these proposed legislations along in the process. Morgan Stanley writes, the proposal indicates that no new concessions for open pit mining will be granted, except in specific cases of strategic importance for the country's development, which should be approved by the president through the committee responsible for the new law. Now, we've obviously spoken to our lawyers in Mexico trying to understand the potential implications of this law. We understood from an early date that there would be carve-outs to any ban. One of the carve-outs would appear to be, this is a pretty big one, if you can demonstrate something in the national interest, something of strategic importance, there's an opening for you. We know that most states in Mexico have very large mining industries. We know that mining is supported at a state level. So it would be expected that if AMLO wants a ban, then maybe he can get his ban, but there have to be carve-outs, there have to be exceptions, there have to be ways in which states and populations that are supportive of open pit mines can get their open pit mines permitted. In the case of Santo Tomás, it's in a rural region of the state of Sinaloa. Sinaloa is very actively seeking foreign investment, and they've been quite successful at it. We exist within a region, a multimodal trade and transport region with a lot of infrastructure being built by the government to support industry. Santo Tomás fits right in with that mandate. So billions in tax revenues, billions in royalty, jobs in a part of the state and in a state where they're seeking new economic opportunities would appear to be that so-called strategic importance that they're looking for. That is in the event that the ban somehow doesn't involve just new concessions, but still requires this strategic importance. So we think we're protected in two ways there. And indeed, Morgan Stanley writes that the proposal also mentions that contracts, concessions, permits, and authorizations already granted before the approval of the proposed reform will be respected. So there you have it. Existing concessions retain their rights. This is just a proposal at this stage. It requires supermajorities to vote in favor of it in both the Congress and the Senate. And it should be noted that the Morena party only has such a supermajority in one of those two houses. So at this point, we're trying to remain calm and objective about this. I know some of the headlines have appeared scary, but those headlines, the underlying reality is that this is a nuanced piece of legislation that's being proposed. And there would be significant opportunities for us and for others to permit projects should it be passed. And as of yet, we don't know if it's going to be passed. We know that they don't have the votes in one of the two houses. And we know that there's 18 states in Mexico that are highly dependent on the mining industry. And so those votes, even from Morena party members, I don't know that those can be counted on. May not have long to find out about the nuance of this. There's only 1 month during which AMLO retains the presidency when the new Senate and Congress are appointed. It's said that he wants to pass some of these amendments during that month. A number of other things we could talk about here, like the fact that his priority appears to be judicial reform. The mining amendments have barely been talked about by he or the president-elect. Still lots to learn, but what we know already would suggest our understanding of the rights that are contained within legal concessions in Mexico would appear to protect us. Let's hope that this message is one that the Mexican government starts to make loud and clear. President-elect Sheinbaum has stated that she wants to run a business-friendly, foreign investment-friendly government in Mexico. So let's hope that we start to see some of that manifested in her public statements about this and her ministers, a number of whom have been appointed recently, they are indeed pro-business, pro-foreign investment individuals with good track records in that. Stay tuned, but for now, we're comfortable and somewhat confident that our understanding of the circumstances in Mexico would suggest that these concessions are mineral concessions, which are good for decades to come, are protected, and Mexico is a country with a strong rule of law. There you go. Stay tuned for more information on this. But what we'd like to do now is open up to questions.
Hi, thanks for taking my question. Can y'all potential listing strategy down the road?
Okay, good question. And I know I've talked about that in the past. I think that's something, now that the PEA is done and out of the way, I think we will continue having that discussion about an uplisting to the higher board, to the full TSX. I think there's a couple of steps needed before we can qualify for that. And Richard and I are working on that, and we'll hope to have at least one of those steps completed in September. Yeah, we definitely want to do that, and we'll be pursuing it.
And then last question, can you describe your cash burn?
Yeah, we're in economy mode at the moment. We're burning around $500,000 a month, just under. But obviously we want to get back to start the drill program, which we're planning to do this fall, which would obviously increase that cash burn. We do own our own drill, which is on site in Santo Tomás, so it's maybe not as significant as it could be, but that's where we are at the moment.
Yeah, and I've been getting a number of messages, a number of questions from you about the nature of talks that we're maybe having with potential strategic investors, potential inquisitors, that sort of thing, and banks. We are in discussion with a number of those. We're getting a very favorable response to the PEA numbers, and we are actively pursuing a strategic. Such an investment would allow us to resume drilling. As well, it would satisfy one of the criteria that I referred to in your earlier question, the uplifting question. So it would give us the capital necessary to meet that requirement of a listing on the higher board.
Yeah, it just seems to me it could definitely bring in more institutional investors that can't list on the Vancouver.
Yeah, no, you and I in conversations before, I've talked about that. You've provided very compelling stats about the ability, particularly of U.S. investors, to invest in a TSX listed company versus a TSX venture company. And we should pick up that conversation in September.
And then last question, and I know you covered this at a high level, but Q4 milestones we might look for, or first half 2025 milestones where you want to set our expectations?
Yeah, I think obviously the one thing that's out of our control is the legislative agenda in Mexico. So we're looking for some clarity on that.
But we'll have resolution on that. It's going to resolve itself, which is always obviously wanted to resolve it the right way, but it will resolve itself. We'll be back publishing drill results because we'll be drilling and expanding the resource as we start doing the work required for a PFS.
Yeah. And then part and parcel of all that, of the drilling and additional second phase exploration is, of course, a further investment in the company. As mentioned, we're deep in discussions with some strategics.
Gotcha. Anyway, great job. Looks like y'all are incredibly well positioned with a very low CapEx project, and I think y'all are in a pretty unique position as the upcoming demand exceeds the supply.
Yep. Yeah, I appreciate that, Jesse, and thank you. And we should certainly schedule a discussion in September. So I will send you an email about that.
Great. Thank you. Y'all have a nice weekend. Bye.
Thanks. Thanks, Jesse. Randall, can I click that button and give you an opportunity to ask your question?
I think Jesse covered a lot of the things that I was going to talk about. I just couldn't get on the Q&A.
Oh, okay. Excellent. Okay. Thank you, Randall. Is there anybody else who I can unmute and give you a chance to ask a question? So I'm going to say that's no. Hopefully that's because we were thorough in the presentation and addressed all the questions. I'm just being told that there should be a Q&A button. The Q&A button is right here, and it's not giving me Yeah. But we found a workaround. So thanks, Andrew. Thank you, Richard. Thanks to
Yeah,
everybody.
and any other questions, just flip us email and we can answer them if we didn't get to them today.
Yeah, I think maybe one question I did speak about a little bit, and that is people are asking what sort of response we've got to the PEA, and specifically, have we heard from any potential strategics, majors on the subject? And the answer is yeah, and they clearly like the numbers. We've got some favorable responses. We will be spending a considerable amount of time starting in September, reaching out through a strategic advisor, through an investment bank with strong connections into the mining world, to potential partners, acquisitors, investors, et cetera. And we do expect we're going to get a lot of them in the data room. We do expect that that process may ramp up in pace as there's clarity on what's going on in Mexico. But early indications are that people like these numbers. And I think that's fairly obvious. Joseph, I see you've raised your hands. I will click that button, and if you'd like to ask a question.
Hey, Adam.
Hey, Joseph.
Just wanted to ask you what I didn't understand that. I wish I could see the slide, but it said something like the concession, the existing concession. It's almost like it gives us a right to drill. Is that like the understanding of that? What exactly do you mean by the existing concession? You think that it gives us the right to drill or the right to get a permit or something like that? I don't quite understand that. As far as
No, I get the question. Concessions are contractual arrangements between the Mexican state and the concession holder,
Which we pay for every year. There's a requirement to pay for it to keep those concessions.
Yeah, and yeah, that's right. We pay for it, and we're required to conduct a certain amount of exploration work. So you can't sit on concessions forever and not advance them. And we are, of course, in good standing on both fronts. That is it's a contract between the state and the concession holder, giving the holder the right to explore the properties and giving them the right, subject to obtaining permits, and the permit system is defined in that concession, to transfer from exploration to exploitation. That only makes sense. I don't think a mineral concession that didn't carry a mechanism by which you could transfer to exploration or exploitation would make sense. You want to know that your work on exploration could ultimately turn into a mine, into exploitation.
I think, and what that means, I think, in reality, is if they take away the rights from all existing concession holders across the whole of Mexico, that's hundreds of lawsuits incoming. So there would be a big incentive for them to say no concessions will be issued, or all future concessions issued will not allow open pit mining. That would be a fairly straightforward thing to do, and not involve any lawsuits from existing concession holders. Whereas if they take it, there would be literally hundreds, if not thousands, of lawsuits that they'd have to deal with if they take away the existing concession holders' rights, who they've taken our money and signed agreements saying we can mine there if permit conditions are met. So I think that would be logical. Yeah, I'm not saying that's what's going to happen, because it's not always logical, but that would be the logical thing to do if they have a desire to stop open pit mining in the future.
Yep. Yeah, it would make sense that they could alter contracts going forward, but you can't naturally alter a contract that's already in place, and that's what
not without existing concession holders making a claim against you.
Yes. There's also been discussion in diplomatic circles about how some of these proposed constitutional changes would violate some of the trade agreements that Mexico's been a party to for decades, North American Free Trade NAFTA, or USMCA as it's called, along with a more recent Trans-Pacific Partnership Agreement. Some of what AMLO has proposed, a large part of what AMLO has proposed, would violate those things. It may be a case of a president, famously garrulous president, who holds a news conference every morning making statements about what he wants to do. But then behind the scenes, the lawyers and others figure out what's possible. And so from AMLO's no open pit mining, comes some advice, and that's what we understand there's been a lot of work over the last 6 months on fitting that idea from AMLO into the existing legal framework. And that's why you're seeing, I think, things like no new being added to the narrative. Existing can't be altered. New, of course, you could change mining law and change new concessions going forward, but we're pretty comfortable that the protections are in place, whether it's the nature of a mineral concession in Mexico or the trade agreements, such that mining will continue. Those of us with concessions in good standing can proceed to exploitation and permitting. So actually I got a question here from...
Thank you.
What's that? You're very welcome, Joseph. Thanks for asking the question. I've got a question for Andrew. In terms of the drill program, where do you see some of the, I think you addressed this, but where do you see some of the areas of greater impact with additional drilling?
Definitely on the south zone, the southwest quadrant there. I'm actually pretty excited about that. There's a large swath of ground that we haven't tested. One of the outstanding geophysical targets that we've never tested is to the eastern side of the south zone, where we've got coincident chargeability and resistivity anomalies that have never been explained, and we don't see them anywhere else, but they seem to join up with the projection of the mineralization on the south. Generally, in the area, Adam, you mentioned Barawacha. We're not going to drill there right now, obviously. We'd have to do a deal first, but the area is particularly prospective. The old reformer mine, that probably deserves some drill holes. And we've got some great skarn targets out there. But first and foremost, let's just do the south zone, southwest quadrant, and we've got to drill in between the two pits in the pillar. And that's going to help us reduce costs and probably increase resource.
Excellent. Yeah, and as I mentioned, phase one was just that. It was phase one. I think to have executed that, got a $2 billion NPV, a terrific peer group leading project is a great start, but there's still lots of story to be told here. We have over the last several months published some pictures and some videos of the crew doing their surface field work in the south zone, and you've all seen large areas of malachite staining, so copper mineral staining. Have I got the mineral right, Andrew?
Yes.
Yes. Oh, good. Okay. There you go. So that's pretty interesting stuff. Thanks to the guys in the field for doing that and sending pictures. But yeah, lots still to be told here. I think we're all looking at perhaps at a rate cut coming up, not to get too macro here, but we're looking at a rate cut, which typically helps the price of copper, which typically helps copper equities like ourselves. So we may be seeing momentum from that side of things over the next few months, as well as hopefully momentum from clarity of the situation in Mexico. And then for our part, we'd like to bring in a strategic, have the resources to execute a phase and generate some momentum ourselves to amplify what's going on in the macro environment. So with that, thank everybody for your participation. Thanks, Andrew. Thanks, Richard. And as always, know that you can reach out and speak to us directly and communicate with us directly. So thank you, everybody, for participating. We will be posting this discussion on the various social media channels, and we look forward to speaking to you again and hearing from you. Thanks, everybody.
Thanks.
Thank you.